When you look around, you will see housing prices rising. But take a look in your wallet. It probably doesn't correspond. In previous decades, this wasn't an issue. How much people earned and the cost of their home would be relatively in sync. If housing was going up, it was inflationary pressures, and people would also be receiving more interest on their savings, and their earnings would be increasing as well. Times have really changed. You came here for the truth, so let me unveil that for you. We are going to look around the United States. I want to also mention Canada. I want to talk about real economic issues today, not the silly business you get on television and in the mainstream media. So let's take a look at this information coming out of ATHEREUM. That's ATTOM. And they provided this excellent chart here and some other ones that I want to show you today. Let's begin with this. Where home prices are affordable or not for the average wage earner. Okay, that's the average person. We're not looking at the top 10%. We're not looking at the bottom 10%. We're looking at people on average. And take a look around. When you see the orange, that's no. If you see the green, that's yes. And you will see very clearly there seems to be more orange than green. Median home price affordable for the average wage earner, yes or no. And you will see the different areas that you can actually take your mouse around and highlight the different areas where you may live or you're interested in looking at, and you will see different information. So if I just put my mouse over this one in particular, you will see the net migration that's taken place, positive or negative. It shows you the amounts there, annualized average weekly wages that you can see, comparing different areas around the United States. This is a very, very good piece of information that I think everybody, regardless if you live in the US or not, should be checking out. This data is very, very good, and it will tell us a lot. So I'm not going to get into all the details of different areas, but you can definitely see what's happening. I'm noticing basically the most populated areas are becoming unaffordable. And that's the way I look at it. Whether we're looking at here along the West Coast, the entire West Coast, different areas of Texas, you're looking at Florida basically, looking at the East Coast, but then you have Detroit, Michigan, you got some different places around here that are affordable. But of course, we know what's happened to the economy in many of those cities. And that's what's going on here. Where most of the population is, it tends to be unaffordable or getting to that position. Now we're looking at the home prices, but when you look at everything else factored in, whether that's food and energy and everything else, yes, it is becoming unaffordable. And the average person is unable to make ends meet. So what do? Well, they have to take advantage of any sort of government assistance programs, social assistance programs that are available. They need to take on 2 and 3 jobs. They take on temporary work, their side hustles, and everything else that they can do. Well, let's get into some more details from this. ATHEREUM Data Solutions, curator of the nation's premier property database, released its Q1 2018 Home Affordability Report. All right. In 2018, home prices were not affordable for average wage earners in 304 of 446 U.S. counties analyzed in the report, 68%. So 68%. It's unaffordable. Now, many people would say, well, I live in this area and I pay $100,000 for my home, $120,000 for my home, and everything is just fine and dandy. Well, look, I'm going to cherry pick certain areas, definitely. But guess what? Those areas are where the most population is. And that makes a lot of sense to look at those areas. Sure, you can find places that are way more affordable. Definitely. Not everybody lives in Manhattan. But we are looking at areas where the primary part of the public lives. And that's the way you have to look at these statistics. Sure, you have to encounter some generalizations and we have to look at certain areas over others. But what I'm trying to do here is analyze the data for where most of the population resides. All right? And you can see in this case here, 68% of these counties are unaffordable. Now, what does that mean when an individual is unable to afford their home, unable to afford their expenses? Well, of course, that puts you into economic distress. And guess what's going to happen? We are right now, interest rates near record lows. We're looking at equity prices at near all-time highs. You look around, general sentiment seems okay. Nothing's really going on per se. And yes, we've seen a lot of retail stores closing, but there's more than enough at this point. You're looking at people who can, do what they need to do in life. But things could change. And what happened during 2008, surely, could happen again at some point in the future. And as a result, people are in this high position now, or maybe an affordable position now. What's going to happen should things change economically? Well, obviously, we're going to have some very big problems. Okay, let me get into this further. Stop ranting for a second here. All right. The report determined affordability for average wage earners by calculating the amount of income needed to make monthly house payments, including mortgage, property taxes, and insurance on a medium price home, assuming a, look at this, 3% down payment and a 28% maximum front-end debt-to-income ratio. That required income was then compared to annualized average weekly wage data from the BLS. We're talking about areas in which people should be able to afford more of their home. Maybe in certain areas that it's unrealistic, for sure. But are you telling me that in 300 of these 446 counties, it's become so expensive, the average person can't even buy a house? That is ridiculous. That is nonsensical. And historically, that's absurd. Share of the U.S. market's less affordable than their historic affordability averages. And I wish this would go back further, but we're looking at it basically from about 2005. All right, we had this period of time, financial crisis, housing crisis time frame, where a lot of people were able to get homes at more affordable rates. Housing prices came down to a much better level. Definitely. There were certain areas that were still definitely overpriced, but hey, it was better. But it didn't take long. It took just a few years, and yet things have become less affordable. Home price appreciation versus wage growth. And this is really where the problem lies. Because if your house went from, let's say, 100,000 to 200,000 and obviously double, then your wage should be corresponding to that, at least a significant increase, maybe not double your wages. That's not happening. That's not happening at all, and you could see it in this chart here. Now, your home price appreciation, perhaps it's not at these skyrocketing levels that it once was. Seems to be somewhat of a downtrend because of everything that's going on economically. But what's important to note is that wage growth is not present. You could see financial crisis time frame declining there, but it's been relatively steady on wage growth right across, and actually in 2018 is basically nothing. Well, this isn't going to improve, and of course, home prices may continue to rise and wage growth will be stagnant, and there will be a continued chasm in between these two. Now, even if home prices come down significantly, they're not going to come down to the levels that we see wage growth. Wage growth is not going to come up. It's just the way it is. Over time, things become more affordable because we're not able to reap the benefits of inflation. We get only the short end of the stick on inflation. That's the way it works. Your wages at work might increase by 2-3% a year, but your home price, your energy and food prices are increasing significantly faster. So look at this. 8 of the top 10 highest priced counties post declines in net migration in 2017. So this is huge because you're looking at the data, you're looking at the statistics, and you're wondering what's happening. What are the effects of their failed policies? The report also incorporated recently released Census Bureau data showing net migration of population in 2017 at the county level. Net migration is the difference between the number of people coming to a county and the number of people leaving a county. 8 of the top 10 counties with the highest median home prices in 2018 posted negative net migration in 2017. Now, let me speak to you in English for a second. The higher the home prices become, the more people move out. That's it. That's the way that it goes. 8 out of 10, all right? Not in all cases, but 8 out of 10. That would be a pretty good percentage. Should that surprise anybody? Whenever I do my videos about Illinois, people always speak up about it, and I'm very grateful for that, because they'd say, I'm from such and such place. This is how much I pay in property taxes. It's bankrupting me. I'm having trouble keeping things together, and I'd rather just move to a different area, perhaps different area of Illinois, or maybe I want to move out of the state entirely. I need to find a more affordable location. And so many people are doing this. It's not just 1 or 2 or 10 people. We're talking about quite a few now. It's becoming a trend. And here we go, 8 out of the 10 areas where we have the highest median home prices, people are just leaving. Why? They love to move their whole family and get out of there. They love to be able to just pick up and go. No, of course not. It's because they don't have a choice. And a lot of people want to naysay, a lot of people want to deny what's happening here, because they say, yeah, but the stock market is rising. Well, you can whine to somebody else. I'm not listening to that. Don't go anywhere. Make sure you click on part 2 of this video to get into the information regarding Canada and so much more. See you there.